Mitul. Thanks for being with us this morning. And we were just alluding to that India-China trade, and given all of that's going on, and it seems like with the U.S. yields, the inflation view limit for the Fed, what is the outlook when it comes to the China trade?
Yeah, look, I think as you're saying in your previous conversation, there has been optimism towards China's stimulus, and we saw that with a big bounce in equities. But the reality of the situation is that the stimulus has disappointed, as we saw recently at the NPC meeting, and all we really saw was a net 6 trillion yuan debt swap. We didn't see anything on the property sector. We didn't see anything with regard to putting money in the hands of consumers. And, it is likely that the Chinese authorities are keeping their powder dry and really waiting to see what the new Trump administration is going to look like and what tariffs are going to look like. Although we know that Trump has talked about 60%, will we get to 60%? And at the same time, you have all that, and you have the U.S. economy still very resilient and the dollar remaining very strong. So that some of that optimism is clearly unwinding, and as you alluded to, that perhaps is also having an impact on that reallocation shift from Indian to Chinese equity markets as well. So we're seeing that with the CNY, the Chinese currency, is coming under pressure amidst this strong dollar. So I think we wait for the December work conference in China. We'll also have the March National People's Congress meeting next March, and we may see further clues. But for now, some of that optimism clearly has waned.
So if money moves out of China, will it move back to India or will it move back to US? That is, I think, the most important question.
It's a very good question. And look, I think at the moment, the US is acting like a big vacuum. It's just sucking money from the rest of the world with the amount of money that's going to go through tax, or at least expectations of tax cuts, deregulation, and the way that the US is becoming more isolationist, and this sort of pro-growth, wider fiscal deficit that will probably support growth in the US. It means that the dollar and US assets and with US yields moving higher as well, it does continue to suck money out of the rest of the world. And so it's not obvious that that money goes out of China and into India, although arguably we've already seen quite a sharp outflow from foreign investors from India already. I think some of the concerns on India are, and that we're hearing, is growth is starting to moderate. There's clearly uncertainty about what will happen in terms of the central bank and a new governor. And clearly there are some concerns about how the dollar strength and higher US yields impacts most emerging markets. And I think it's not just India, China that could see outflows. It's also the rest of the emerging market spectrum that is coming under pressure.
And is US, Mitul, going to be the obvious beneficiary? Is all the money which is going to pull out of China and has been from India is going to move towards US, you think?
Look, at least for now, that seems to be the case. But I think what's interesting, when you even look at US markets, at least in the equity market, around half of that rally in the S&P post the election has been unwound. So I think even in the US, there is a bit of wait and see. We're seeing the President Trump or Trump elect now nominating positions for his administration. Some of these have obviously been very interesting from a market perspective, and we'll see how that pans out, whether the Senate confirms these nominations. But I think we're probably in a little bit of a wait and see mode. I don't think the Trump trade is over. Certainly in FX, we continue to see the dollar moving higher. And I think, going back to that previous conversation, in an environment of dollar strength and further dollar strength likely, it's going to be tough for other markets, other emerging markets, but not just emerging markets. Even Europe continues to suffer at the hands of a stronger US economy and a strong dollar. And so I think it continues to see the US benefit in this environment. Hard to see that turn around anytime soon.
All right. Thank you for joining.